I always say that when the facts change, then our opinion should change with the facts as well. So with the new facts that Ford has put out, Ford's Facts, has that changed my opinion? Stick around and find out and cut. Hey, what's up? I'm Russ. Thanks for swinging on by the channel and making me a part of your investing journey. We truly do appreciate that. And if you're helped in any way, shape, or form during the program, click the thumbs up like button. Thank you. So Ford, has been flying over $20 a share this week, which is pretty much the highest it's been in almost a decade. And that's after hitting a pandemic low sale price of $3.94. Ford has just been on a tear. So if you've been holding since then, hey, good on you. I doubted that it would get this high, but hey, it has. Q3 numbers came out recently and they were better than expected. Their earnings were expected to fall to 27 cents a share, but Ford surprised everybody and it's only 51 cents a share that it fell to. So that was much better than expected. Their sales for the month of October, now they were down year over year, 4% to 175,918, but that is up from September's number of 156,614. We want to be exact around here, which that was a gain of 12%, making Ford for 2 months in a row the biggest, the most successful U.S. auto manufacturer. So good on them. But their sales that are down year over year, they're obviously blaming, like most auto companies are struggling with, is the semiconductor shortage. So that's something that has been tough to escape for many companies, but Ford's trying to, like a lot of other companies are, Apple, for instance, with their M1 chip, I mean, that's going to give them a leg up that they're not depending on another company to provide that. So Ford is partnering with a company called Global Foundries Inc., ticker GFS, and you can buy them. They're a publicly traded company. They've gotten a little bit of a spike off of this news, and I think that's good. I think they see the writing on the wall and they want to get this in-house. A lot of companies want to, as much as they can, control the supply of the chips, of the semiconductors that are coming in. So that's good news. More good news, as this is a channel where we do talk about dividend growth investing, is that they have reinstated the dividend. Now before, when they cut it, it was at 15 cents a share and it had been frozen there for a while. Pretty stable and solid, just not growing. So it's 10 cents a share right now. I took a look at the numbers and I would expect that dividend annually to be about $2 to $2.5 billion in free cash flow. That it would have to be covered by, to say. So not in free cash flow, that's what it would cost that they would need to pay out. But their free cash flow, the trailing 12 months, was $10.8 billion. So they're easily able to cover that $2 to $2.5 billion that they would have to pay out in the form of a dividend. Well, they don't have to. They're choosing to pay that dividend out. That's really good. That's really interesting. And just one more thing that investors love about Ford, but I'm worried that this is just a larger part of the EV bubble. So many EV companies and EV related things are just on fire. No pun intended. But yeah, it just feels very frothy. And I think part of this is that Ford is really pushing the narrative that they're going to be an EV company, which, I think they could. The writing is on the wall indeed, much like the cigarette manufacturers have, over the decades been seeing a decline in cigarettes, and they're moving to the e-cigarettes and the vaping and the nicotine pouches, trying to get away from the more harmful combustibles and going into the heat, not burn technology. Same thing with all the EV companies. It's just that Tesla from the get-go was a pure play EV company. So one that I didn't unfortunately believe in. Their earnings were non-existent. They were burning cash so quickly. And I had bought a few shares way back before the split, and I sold out of those stupidly because I took the advice of some experts that they were going to be going bankrupt. But again, I think Ford, they're obviously a little more established. They're making that transition. They've got a couple new EV plants in the South that are opening up. So they're putting a lot of money into it. Their EV sales so far are 14,062, which is up 195% year over year. So that trend is clear, but really cool. The Ford F-150, the electric Ford F-150, which looks amazing. They have 160,000 reservations for that. So that is going to be driving. They're going to start producing the Mach-E, the Mustang Mach-E, which is like a competitor for the Model Y of Tesla. So they're moving and shaking and baking with the EV. They canceled plans with Rivian. Dude, this was big. I've been ripping on Rivian because they have no revenue. They have nothing going on, yet they were the third, I think by market cap, the third largest automaker, which that's loco. That's just, oh, by the way, today's episode is brought to you by Walmart 100% pumpkin filling. Thank you, Walmart. Back to the show here. I don't know why I do that. It's like I was in my garage and I was like, I'm going to show everybody this wonderful can of pumpkin. And it's like some bizarre show and tell that I have going on here. So we're going to leave that. We're going to go with it. Moving on. They canceled their plans with Rivian. And if you didn't know, Ford owns 12% of the Rivian company. So I think that helped Ford kind of go up as Rivian was screaming up the charts. Obviously, Ford owns that, so that means that they're more valuable. They're being pulled up along with Rivian, but that's obviously been just coming back to earth, rightfully so. That just shows me it does feel like the dot-com bubble like that I lived through. Even though I wasn't investing back in the late 90s and early 2000s, I was just getting out of the Navy, and I remember people saying just, dude, if it's got if it's got .com on it, buy it. Just buy anything with .com. And we saw how that worked out. And it feels, having lived through it, it feels very similar because it's just, if it has EV, boom, it's going up. People are buying it. So, it is a technology that revolutionized the world, which is the EVs will be as well. But they all can't be successful just like pets.com, and you can't just have an idea, put .com on the end of it and be successful. So you actually have to have the rubber meeting the road, which Ford is obviously doing. Rivian was not yet. So that has fallen. Another thing, Ford raised $2.5 billion selling green bonds in 10-year bonds. I think they were like a 3.6% yield. So they want to borrow less and buy back some of their junk debt. So I like to see that. I like to see them moving away from the debt, and they are just going big on the EV space, rightfully so. Right now, I think Ford feels overpriced to me. It's gotten really expensive really quick. Nothing moves up in a straight line. So, I might be intrigued if this gets down to the $15, $16 range again, which I think it will. But if you're a believer in Ford, hey, I have no problem buying and holding. If that's the game you're playing, we all got to know the game we're playing. And if you're long-term buy and hold, then you know what? Consider starting a position here. That's my opinion on it. But personally, I'm not big on the auto manufacturers because they usually have tight margins and it's an ultra competitive industry, and that can lead to a lot of spotty, unpredictable earnings. So I'm just not a fan of the auto space and the EV space because, as I have had this opinion, which has been proven wrong with Tesla, I didn't think that they were going to be able to do this by just putting a battery in a car, kind of like internet on the radio, or the radio on internet. It seems obvious and it's eventually going to happen. But we've been wrong before. We reserve the right to be wrong. It's just what we do as humans. And what I would rather put my money into is actually two things. First, I would rather put money into the companies that are putting the parts and technology into the EVs, in particular the lithium. I used to own Albemarle, and boy, was I wrong on that. I sold them. I was buying Albemarle around $65 a share, sold it in the 140s to put it into a more stable dividend company, even though they are, the yield wasn't as big. So I would much rather go into the companies that are putting the parts, they're behind the scenes, so to speak. And then also companies like Quantumscape. I've just bought Quantumscape. They are super risky. You got to know that. They are a solid state battery manufacturer, and they have about 200 patents, and they've been sending them off to independent testing, which has had some positive results for Quantumscape, but super risky because they have no earnings, no sales, no revenue. They're burning cash. They're diluting shareholders. They're issuing more shares to raise money to try and get this company going. So if you were to buy something like a Quantumscape, which I eventually or occasionally do like to gamble with, I think it's a good calculated risk, but super speculative, super risky, and I would not be surprised if this company took the world by storm in 4 years or if they were completely kaput. So you always have to know the game you're playing and why you're buying things and your thesis for buying something. So that's what I'm doing. Oh, and then also with the EV space is nuclear. I think nuclear is going to be amazing because I know we like green energy with the windmills and the solar panels and hydroelectricity and all that, but come on, honestly, if every family has 1 to 2 EVs and they're plugging them in every night around the world, that's going to be a major increase in electricity demand. So that'll be good for the utility companies, but that will also be, I think, the only thing that's sustainable and clean and green is nuclear energy. Now, I lived on top of nuclear reactors when I was in the Navy. I was on board the USS John C. Stennis aircraft carrier. I'm okay. I might show you some pumpkin filling during a video, but other than that, I'm largely unaffected by the nuclear reactors that I lived on top of for over 3 years. But with that being said, I think nuclear, so I think the EV batteries with the solid state, by the way, doesn't use the liquid that the lithium does. So we want solid state because it's safer, charges faster, lasts longer. And if Quantumscape can be the Tesla of the EV batteries, look out, the sky's the limit for Quantumscape and their patented technology. So that's why I'm investing in them. And then as far as Cameco is another one that I would look at, ticker CCJ, as far as nuclear companies go. As far as that, but let me know, what do you think? Are you buying Ford? Are you holding Ford? I've talked for about 15 minutes or so now. I don't know. I can't read that time. My eyes are failing. Let me know what you think. If you were helped by this, are you going to be buying Ford? But if you do want to see 5 dividend companies that I am buying forever, click that video right here. I go in depth into each of them, tell you why, and I will talk to you there.